Are you seeing signs of inflation beginning to increase?
Let me answer that. Greg can give more. We're seeing very substantial inflation. It's very interesting. I mean, we're raising prices. People are raising prices to us, and it's being accepted. I mean, it's not. If we take home building. I mean, the cost of. We've got 9 home builders, and in addition to our manufactured housing thing, and then operation, which is the largest in the country. So we really do a lot of housing. The costs are just up. Steel costs, just every day, they're going up, and there hasn't yet been, because the wage stuff follows. I mean, if the UAW writes a 3-year contract, we got a 3-year contract. But if you're buying steel at General Motors or someplace, you're paying more every day. So it's an economy really. It's red hot. I mean, and we weren't expecting it. I mean, all our companies, when they thought when they were allowed to go back to work, at our various operations, we closed the furniture stores. I mentioned, they were closed for 6 weeks or so on average, and they didn't know what was going to happen when they opened. And they can't stop people from buying things, and we can't deliver them. And they say, well, that's okay, because nobody else can deliver them either, and we'll wait for 3 months or something of the sort. But the backlog grows, and then we thought it would end when the $600 payments ended, and I think, around August of last year. It just kept going, and it keeps going, and it keeps going, and it keeps going. And I get the figures every week. I call, or Bumpkin calls me, and we go over day by day what happened at 3 different stores in Chicago and Kansas City and Dallas, and it just won't stop. People have money in their pocket, and they pay the higher prices, and when carpet prices go up in a month or two, we announced a price increase for April. For our costs are going up. Supply chains is all screwed up, for all kinds of people. But it's almost a buying frenzy, except certain areas you can't buy yet. You really can't buy international air travel, and so the money is being diverted from a piece of the economy into the rest, and everybody's got more cash in their pocket than, except for. Meanwhile, it's a terrible situation for a percentage of the people. This suit, I haven't worn a suit, for a year practically, and that means that the dry cleaner nearest just went out of business. I mean, nobody's bringing in suits to get dry cleaned, and nobody's bringing in white shirts to get the place where my wife goes. The small business person, if you didn't have takeout and delivery services for restaurants, you got killed. On the other hand, if you've got takeout facilities, you've done, same source sales of Dairy Queen are up a whole lot, and they adapted. But it is not a price-sensitive economy right now in the least, and I don't know exactly how one shows up in different price indices, but there's more inflation going on than quite a bit more inflation going on than people would have anticipated just 6 months ago or thereabouts.
Yeah, and there's one very intelligent man who thinks it's dangerous, and that's just the start.
Greg, you probably are in a good position to comment.
Yeah, well, Warren, I think you touched on it. I mean, when we look at steel prices, timber prices, any petroleum input, fundamentally there's pressure on those raw materials. I do think something you've touched on, Warren, and it goes really back to the raw materials. There's a scarcity of product right now.
And here we are in this world where we had 0 interest rates last week or this week on a four-week note, and Berkshire Hathaway, which has more than this, but let's say we had $100 billion in Treasury bills. We have more than that. Before the pandemic, we were getting about $1.5 billion from that a year. At present rates, if it's 2 basis points, we'd get $20 million. Imagine your wages going from $15 an hour to 20 cents an hour or something. It's been a sea change, and it was designed to be that. I mean, it was that's why the Fed moved the way they did. They wanted to give a massive push, just like Mario Draghi did in Europe in whenever it was 2012, when he says whatever it takes, and they went to negative rates. And the Fed has said it doesn't want to go to negative rates, and I think the Treasury actually has got some small bar. But if present rates were destined to be appropriate, if the 10 years should really be at the price it is, those companies that the fellow mentioned in this question, they're bargaining. I mean, they have the ability to deliver cash at a rate that's, if you discount it back, and you're discounting at present interest rates, stocks are very, very cheap. Now the question is what interest rates do over time. But there's a view of what interest rates will be based in the yield curve out to 30 years and so on. It's a fascinating time. We've never really seen what shoveling money in on the basis that we're doing it on a fiscal basis while following a monetary policy of something close to zero interest rates, and it is enormously pleasant. But in economics, there's one thing always to remember: you can never do one thing. You always have to say, and then what? The pension managers get more and more desperate as interest rates go down, so they'll listen to almost anybody that promises them. They've always had that tendency anyway, but they'll listen to people that promise them that they're going to, one way or another, solve their problem for them, and that isn't going to work. So it's a big, big, big problem. And of course, the real problem is, let's just take a hypothetical state that has a huge pension deficit and maybe even has a cost of living factor in it, which is going to really be a killer. And you can move if you're an individual. Charlie won't move to save that $500 million. He was not going to move to Nevada or someplace. But you can move if you're an individual to some degree, particularly if you're rich and old and retired. And you can actually take away an asset from that kind of environment and give it to another state that doesn't really need it as much. So you'll get adverse selection over time. But if you're a company and you put a plant there, you can't move the plant in 5 or 10 or 20 years. We've seen it, some strange things happen in the world in the last year and 15 months, and we've always recognized the fact that stranger things are going to happen in the future. And I would say, if anything, it's reinforced our desire, to figure out everything possible we can do to make sure that Berkshire is 50 or 100 years from now, every bit the organization and then some that it is now.